Hello everyone. So this is the second part of the video for the long-term construction contracts basics packet. So make sure that you've watched the first video. It's about 27 minutes long. It goes over the long-term construction contract basics and then a practice problem using, it's the same problem, but we use the percentage of completion method. Okay, so if you've seen that video, then what we're gonna do is we're gonna use the efficiencies that we've gotten from that video and we're gonna keep going, okay? Sorry to have it in two videos. It started to get very, very long. I didn't want it to be like a 35 or 40 minute video. Okay. So basically, XYZ company is in the construction business and specializes in constructing apartment buildings. On January 2nd, the company began a project to build a 10-story apartment building for a contract price of $10 million. The company estimates the apartment building will cost $8 million to construct. The following information is available. Okay. Again, we've already gone through all this information in our previous problem, so we're going to just go through this one relatively quickly. The good thing is once we've done percentage of completion, the completed contract method is honestly the easier method. So basically, once we've done the percentage of completion, this should only take us like 5 minutes to go through this type of problem because again, the percentage of completion one is the harder one. And it says again, the building was completed on December 31 of 2018. Okay, required to prepare all the journal entries for XYZ company for 2016, 2017, 2018, assuming that they use a completed contract method. Date all entries December 31 of the year. Okay, so let's just go and grab our percentage of completion problem for the first year, and let's just compare the journal entries. Okay, so the reason we're going to go fast is because literally, you're going to see these are the exact same journal entries we make for percentage of completion. There's only one difference, okay? So again, remember the amount of cost that we incur, which is $2 million in 2016, we capitalize that into the KIP account because again, that's basically saying we're incurring these costs to make this asset account, and so that's an asset to us because eventually we're going to sell this to make money, okay? So that's why we're doing that, and again, it's literally the same entry, okay? Accounts receivable, again, we bill this, okay? So we do debit to accounts receivable, credit to billings on KIP. Again, remember, billings on KIP is a contra asset account because we don't want to overstate our assets. And we went through a lengthy reason and example of how that works in the first video, okay? Then the cash collected is $900,000, so we just debit cash, credit accounts receivable, $900,000. Again, exact same journal entry. The only thing you're going to notice here is that, again, we're not recognizing revenue for the completed contract method. Percentage of completion, we do recognize revenue. Completed contract, we recognize it all at the end. Okay, so that's the difference. That's the only difference in the journal entries, is that these are all the exact same, just that we're not having the revenue recognized on the completed contract method until the very last year. So that would be 2018. Once the project is done, we recognize all the revenue. Okay, so that's literally the only difference. Okay, so if we flip to the next page, okay, and we get our comparable page for the percentage of completion method, we'll again see it's the exact same journal entries, right? We're debiting KIP for the amount that we had in expense, right? Let's not cover the facts, okay, right? So if we incurred $5 million to date and we incurred $2 million in 2016, okay, we've incurred $5 million total by the end of 2017. We incurred $2 million in 2016. That means we must have incurred $3 million during 2017, right? To get to $5 million from $2 million, we must have incurred another $3 million. So that means we just capitalize those, okay? We bill $4 million on accounts receivable, and then we collect $6 million, okay? And again, if we look at these journal entries and compare across, they're literally the exact same entries. The only thing that changes is we don't recognize this last entry. There is no last entry for recognizing revenue in 2017 because the project is not done. And we only recognize revenue under a completed contract once the project's completely done, okay? Then let's just grab our last year and compare that. Okay, so we'll see again, the first three entries are exactly the same. And again, just to look at the numbers, we've incurred $8.5 million by the end of 2018. By the end of 2017, we've incurred $5 million of costs. That means we've incurred $3.5 million of costs in 2018. So KIP and then cash, materials, and payables, or whatever you want to credit, that makes sense. Accounts receivable, again, is billed at $4.5 million. Cash collected is 3.1. And then now these entries you're going to see are a little different, okay? So because of the fact that we have not recognized any revenues or any expenses yet, okay, what's going to happen is that we're going to have a little bit of a different set of journal entries, okay, for completed contract versus percentage of completion. Okay, so the first journal entry here is to record all the expenses, right? These are our expenses. It's the cost of construction. right? We incurred $8.5 million of expense over the course of the life of this completed contract, over this contract, right? That's what we had. We incurred $8.5 million of expense, right? That's what tells us in the problem, okay? Then we're going to credit off the KIP account for $8.5 million, okay? If we look at the journal entry over here, when we credit KIP, it's for $10 million. Why the discrepancy? Well, it's because we're not recognizing the gross profit in KIP every year for the completed contract method. If we remember back, okay, we debited KIP for the gross profit, we debited KIP for gross profit, and then we did the same thing in 2016 as well. We kept putting more and more money into KIP. We kept capitalizing those gross profits, and that ended up being $1.5 million of gross profit by the end of the contract. Okay, here we don't ever capitalize those profits into KIP, right? We didn't make any of these entries that actually record revenue at the end of any of the years. Okay, and so that means that the KIP balance is only 8.5 million, right? It would just be all these costs that we've capitalized into the KIP account. Okay, so we just record the cost of construction and then we remove the KIP account because we're selling the KIP, right? We're getting rid of this building. Okay, then we have to remove the billings, which is 10 million, and record revenue of 10. Okay, we haven't recorded any revenue yet, but we're allowed to record 10 million, right? Because we've completed the building. Okay, so we record the 10 million of revenue. Then we debit off the billings on the KIP. Again, billings on KIP is a contra asset account. And to remove it, it would have a credit balance. So to remove it, we'd have to debit it off. Again, the billings on KIP would have 1.5 plus 4 plus 4.5, which is $10 million sitting in it. So we go ahead and we remove that account from the books. Okay, so that is basically the end of the basics video, the two sets of basics videos. This is the completed contract method. We went through this one a lot faster because, again, this is kind of the more basic one. And if you, and again, watch the videos in order. Do the first part first with the basics, the introduction, and then the percentage of completion method, and then do the completed contract one, because we go over in great detail everything about all the calculations here are gone over in great detail in the other packet, okay? And then we just or in the other video, and then we kind of just use that efficiency to move forward so we don't have to keep redoing all these calculations. Okay, I believe that in the next videos for the advanced topics, those problems are very similar, and so we're going to use some of the same efficiencies that we got in these problems, okay? Mainly centered around these first three journal entries, okay? These are generally always just going to be the same journal entries no matter what happens. The only thing that will change is the amounts potentially, but we're going to use some efficiencies that we've gotten from these packets, so that way, because these journal entries are relatively basic and they're always the same, okay? As we've seen, we've done 6 sets of them now, okay? What we want to focus on the next videos is when we have a loss in the contract, okay? There's 2 scenarios for that. Here, we always had a gain, we always had a gross profit, and we saw that, right? Because we were always in a situation where our revenues exceeded our costs, okay? Our estimate of costs, okay? And so that's the end of this topic, and I hope that was helpful.